This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 9:11 p.m. on October 18, 2019. This is a special market update strategic webinar for everything that's happening with the markets at this point. We are in a very crucial stage. And session will be recorded, uploaded to the Google YouTube channel. And like I always say, it's available to all members and free trial subscribers to listen to at their own time, as well as anybody out there who's going to listen to it on their, as long as you have an internet connection. And that's about it. Full disclosure, this is purely for financial education, not for any solicitation or advice. And we shall begin. One other quick reminder that I like to put out there all the time. We do have a promotional Instagram channel, Clueless8 Trading, Clueless8_trading, and that highlights some of the more exciting trades, options charts specifically, which I don't always have time to put out there on the daily private Twitter feed. So please subscribe. I know you guys have, and take a look at it and pass the word around. It's free. It's primarily for promotional and advertising purposes to get the word out there on Clueless8 Trading. It is not, I repeat, it is not for real-time alerts. That's only the privy to paid Clueless8 Trading members. All right, so let us begin. Just going to share a couple of thoughts on what's going on. Even though we are all striving very hard, I know I certainly am, to be tactical, unemotional traders, the best setups in the world work out very well during the day, and then we take a little profits, then we set up other trades going out, and then bang, things happen. So let's just put it this way, and I'll be straightforward, which I always am. Some people like it, some people don't, but like they say, who the hell cares? You ain't paying my bills. So this is what's going on. The technical aspect of the market is very mixed. There's a lot of mixed signals coming out. And the simple reason behind that is the fact that the market is being driven by totally emotional, and I mean emotional headlines that are coming out from our side, from the White House, and emotional comments or tweets from the Global Times of China or the Chinese Commerce Ministry that are coming out from both ends. So we're not in the blame game. We're in the business of making money. This is a very hardcore situation and a very complex negotiation on the US-China trade deal. We're not dealing with a mortal enemy. We're dealing with an economic competitor. I just want to be clear about that so you all understand. And when you deal with economic competitors, you have to play a lot of political game theory, because two very powerful nations, which we know, which are linked because we are both global economic superpowers. We are far bigger than them, yes, but that means that we have far more to lose in some cases than they do. But the fact is, without getting too deep into it, that every single comment coming out of either side, whether it's a President Donald Trump tweet, whether it is a Chinese comment from one of their state-controlled, I repeat, state-controlled media, will affect the markets in a big way. So technicals get very mixed up. It is very frustrating. And what is most frustrating to me, and I'll just share a personal thought because I normally don't share personal thoughts with too many people, is the fact that obviously I want to make money because this is my living. This is what feeds my family, my rescued pets. But I also want to help to make sure that my members and my Clueless A trading traders and members make money. And I know how difficult it is on extreme volatility, what we call profit maximization in extreme volatility. Look, I'm a fast trader. I'm looking at 14 screens. I'm moving my head, my neck, looking around here. It's like a wall of screens. So I do see a lot more than you guys do. And yes, I do a whole bunch of short-term trades during the day, especially in this type of environment, which generates a nice amount of profit, which negates any of the swing type of losses that I incur. So net, I'm up. Not every day, but in general, obviously. That's why you're listening to me. But the fact is that what the market is doing right now, and this is the daily chart, so I'm just going to put the 5 minute, I'm going to put the 1 minute chart. Okay, so you see this massive volatility. This is the Fed spike, because Fed Chairman Powell, which reminds me that my Twitter feed, for anyone out there who's listening to it, is literally a running commentary on and forecast on what the markets are going to do. So if you really want to understand why markets do what they do, instead of just listening to CNBC or Bloomberg or Fox Financial News, those are the three major outlets, just go through my Twitter feed at the end of the day, and you'll know. And you'll know why it is so frustrating for me at times where short-term trades are delivering 30, 40, 50%, yet the setups of on a certain day are actually losing money. So once you grasp the idea, then I think you'll be a better trader. That's or investor. That's the way I look at it. Just want to keep it simple. So saying all that, we are moving into 3 critical days. 3 critical days. We have the positives. Let me mention the positives. The positives are, and as I'm talking, I'm just going to move the screen around so you don't get bored just listening to my stupid voice. The positives are we have Federal Reserve Chairman Jerome Powell say the golden words that he has been attacked for. And I'm a big supporter of Chairman Powell. He was nominated by President Trump. He is an economic patriot, in my opinion, and I think he's doing the right thing. He's doing the right thing. And he said the golden words that he is not just ready to cut rates, but he will expand the balance sheet. What does that mean for an average American who has no frigging idea, for no fault of their own, because our educational system never teaches economics, is the fact that he is going to basically buy U.S. Treasuries, not mortgage-backed securities, MBS, like we did back in 2009, 2010, 2011, 2012, 2013, 2014, which moved up the market about 6,000 points, the Dow Jones Industrial Average. Think about that for a minute. But he's going to basically put a buffer under the market by not just putting down interest rates. You can't really cut interest rates down to never ending, because we are on the Fed funds rate, what, 2 and some percent? So how much more can you cut? Think about that for a minute. We're not going to go into negative interest rate territory. That's nuts. That's what Europe did. That's nuts. That's like you put money in the bank and you put $1,000 in the bank in your savings account, and then a year later you get 800 back. Oh, that's really exciting, right? Or you get $900 back. You're putting money in the bank and you get $900 back because it's negative interest rates. No, America, in my opinion, our great nation USA, will never go that way. Never. But saying all that, he laid the golden, the Federal Reserve goose laid the golden egg today, and you can read all about that on my Twitter feed, by saying that he is going to start to increase the balance sheet, i.e., buy back US Treasuries, i.e., push more money into the US economy. That's really what it means. Very soon. Now, there's a drawback to that. The drawback to that means that he's seeing some severe risks going ahead. He's not the only one. You're talking about the people. The Federal Reserve Bank of America knows every transaction that's happening in the United States of America. One of my friends, a week, 2 weeks ago, tried to send a little money to another friend. Small amount of money, a couple of grand. And he was questioned hard by MoneyGram as to what the purpose for all that was. Think about that for a minute here. The Federal Reserve is about to push billions of dollars into the US economy, and you don't think the markets are going to question it? Think about that for a minute, okay? So, saying all that, we are in the business of trying to decipher what the markets will do. It is becoming, ladies and gentlemen, very, very difficult. Short-term trades, sure. I can give you a Google at 11.90, it jumps up $8 to 11.98. 30-cent options can go to 66 cents. You're up 100% on your money. Sure, as a trader, I will just say one thing. If you don't have that much time to devote during the day, do not trade at this point. Just being straightforward, because there are dynamics happening much bigger than the movements in the market. The hedge funds are trading like they are dying tomorrow. The movements on the algo HFT black box systems are so rapid that even somebody like me with 14 screens staring at me cannot react that quickly. So bear with me one quick second. I think one of my dogs is locked in one of my rooms. I mean, not locked, but I just have to open that. Stay with me one second. I'm back. Can you guys hear me?
Yes.
Somebody. Oh, Mike said the activity in the futures over the last 6 minutes have been pretty exciting or dynamic. Yes, I do agree with you on that. I do agree with you on that. I've been watching it for the last, since 6 p.m. when our future markets are open for business. Thank you for that post, Mike. So what the market is, from a trader perspective, what the market is forcing many of us to do, because we obviously need to make a living, is forcing us to be extreme day traders. And there's nothing wrong with that. And for day trading charts, you need to use the 5-minute. You can use the 1 minute. because each of these movements are good for 20, 30, 40, 50% on fast-moving SPY calls or puts, right? Remember the puts that we bought yesterday, which I'm going to show you the actual representation of that. Yesterday we had the 293 puts that went from $1 and change, $1.34 at the close, to $4.51. That's a pretty significant return. That's like buying a $13 call that goes to 45. Now we have hedges. We call them hedges, right? We're in short. On the 285 and the 288 puts, which also had a very rapid rise as the market pulled back on the news of the U.S. State Department issuing visa restrictions and all the negativity that hit the market within since 2:50 p.m. right there. So as a day trader, you can capitalize on that stuff. Futures right now are up about 6 points. That's why you see this little blurb up here. So as a short-term trader, which I think all of you should practice a little bit, nothing wrong with it, small amounts of money, put it out there so you understand. Because sometimes you can make more higher, you can make, I want to be grammatically correct, you can make higher returns, ROI, on day trades than you can do on swing trades. Only in these type of extreme volatile markets that are being driven not necessarily by technicals, but are being driven by not even fundamental. Fundamental is all about earnings and all that stuff. Purely driven by political emotions. So do it. Whatever it takes. That's the motto of the Marines, right? Whatever it takes. So 1 minute, 5-minute charts. This was the low on the market at 10 last Thursday. Huge move. This was Monday. This was today. Today's Tuesday. Big move up on Chairman Powell's golden goose gift to not just the U.S. financial markets, but to global markets by saying he's going to start a mini version of quantitative easing, even though he did repeat it's not quantitative easing. It's the same thing. That means you're buying back U.S. treasuries from the overall market and pushing money, liquidity, cash into the U.S. economy, opening up the tap. And then came the pullback, where we ended down 314 Dow points, only because, and it's not a blame game, I'm just explaining to you the way it happens, only because the White House and the U.S. State Department started to go really aggressive on the Chinese government. And the reasoning was that it's all about the persecution of Chinese Muslims, Uyghurs. They're in the western province of China. Read up their history. And yeah, they have been persecuted. But let me ask you a direct question. When was the last time we went around the world defending Muslim persecution? I mean, it's a political move. But to tie that in with the trade talks that are about to begin in 48 hours' time, and the lower level deputies are still there talking, which is good. But then the big high level trade talks, when the delegation led by the deputy premier Li Hao, I think I'm saying his name right. Okay, the man who was seated next to President Donald Trump just a few months ago and showered him with compliments, arriving on Thursday or Wednesday night. to go that hardcore on human rights violations in China. That's old news. Every other country does human rights violations. Come on. But to tie it in with the trade talks is serious business. So are we, or some people within, as I put on my Twitter feed, some people within the U.S. Administration trying to completely sabotage any type of interim deal? I don't know. But if they do, it is going to be dramatically bad for the U.S. financial markets, which is not going to help anybody. I don't think anybody is ever happy. I don't care if it's a GM worker in Michigan or whether it is a steel worker next to me in Pennsylvania who is really happy with the U.S. stock markets completely going down, because it takes everything that they own as a share repurchase or a 401k holder down. Do you really want to see your 401k or your pension fund collapse because of restrictions on investments in some of the largest Chinese companies? I don't think so. So I don't think anyone gets out of it. But my opinion is that that will not happen. I might be wrong. Saying all that, that's the most important thing. The second stuff is the Brexit fiasco going on. But honestly, I think companies are prepared, and Boris Johnson is a very smart guy, but at the same time, he's a hardcore Brexiteer. No one really understands what Brexit is all about. So let them do what they need to do. We'll figure out. The markets right now are at point of maximum pessimism. All right, back to the charts to try to figure this out. And this is a difficult job right now to say. Sometimes you say, well, where is the support for this thing? I can show you a lot of short-term supports on many stocks that you can bounce and trade during the day. But what's going to happen the following day? Honestly speaking, given the political emotions out there, I don't know. And like this, a wise man once said, when you say you don't know, you want to learn more. So let's do that together. So I'm going to start off with a bunch of really long-term charts. So the first one, and I'm showing you the Thinkorswim version here. The long-term chart on the market looks like this. It spans all the way back to 2016. It's back since, let's say, since the election, November. This is where President Trump was elected, November 2016. I believe I'm correct. And this is, it was November 2016, Dominic, right?
I think so, yeah.
Because the next elections in 2020, yeah. So a great run. President Trump, fellow New Yorker, is a great, and we're talking about business here, so I'm going to stick to business, is a great business-friendly president. It's a nice move. Then we went into a sharp decline that was absorbed, and straight up all the way up to 2018. Then came a monumental decline where the world almost ended. But that was absorbed too and bought. And now we're here. So this phase that we're in, where I'm showing you the spies here, you can clearly see it, is where the battleground is. Do we go higher? And if we go higher, we're going to make new highs, big time. So on the monthly chart, and I'm going to ask any of you, does the chart look like it's a complete breakdown, or does it just look like it's trading within a very wide range? Dominic?
I think it's trading within a range.
Within a very wide range. Okay? Yeah. And that wide range resolves itself on the lower end of the scale which is 272.69, which, by the way, with the SPY closed that today at 288, you're talking 16 points lower. So that you're talking about 1,600, 2,000 points down on the Dow. So that's not going to feel good for anybody. Even though visually it doesn't look that bad on a, you know, as options traders, if somebody's consistently long, then that is not going to be a good thing. So that's really where we are. In between, we have some major supports, blah, blah, blah. But this doesn't look like a really bad chart. It looks like, hey, we can do it. And one of the things that I noticed, and I want you guys to focus on, and this is how I'm going to go from the big picture to the small picture. So you all don't just panic and jump off your chairs, or hopefully if you do jump off, just jump off the first, the basement window, so you're not going to hurt yourself. But seriously, okay? The volume, look at the volume. The volume is extremely light compared to what it was back on the month of August. Look at the volume here when we collapsed in 2018. Sorry, this is December 24th, the Christmas Eve massacre, the couple of days prior to that. Look at the volume. Oh my God. Here it's like tiny. So in the old days, we used to look at just price and volume. So if you look at just price and volume, it's not too bad. Low volume sell-off can handle it. That means the so-called smart money, and the smart money gets very confused these days because it's so many, I repeat, algorithmic high-frequency trading programs moving back and forth. The smart money is somewhere there. But the big money, let me just put it this way, the big money is not the algos. The algos are like the hyenas who are like going around chomping at things. It's small. So the monthly chart's not that bad. Let's move on to the weekly. The weekly chart is not good. It's not good. Now it can turn around. The weekly 50-week moving average is at 281. That's quite a bit down, guys. And if you look at the, let me just zoom in. It's very sticky. Okay, there we go. So we have a confirmed double top. It's confirmed at this point. 1, 2. We have the left shoulder, right shoulder. See you later. The right shoulder broke. So you can't be like 150% bearish. In the old days, you could, because these kind of things almost guaranteed that you could put all your bunch of money and short the market all the way down couple of, 500 points, what 500 points? Like 1,000 points, 2,000 points. 289, 81 is good as 290. This is 282. So that is 8 points on the SPYs, right? 8. So you're talking about a good solid 700 to 800 points down, easy. But these days, it is extremely difficult because things change very quickly. You have to accept the big picture and work within the small picture. Look, I scan a lot of other services. I look at a lot of other stuff. I get newsletters from old services I used to follow before I started mine. They still send it to me as a courtesy. They either go crazy bullish or crazy bearish. We're neither. We're tactical traders. I don't just say that lightly as a marketing term. And so all of you have to be the same way. They all say, no, it broke, it's definitively going there, but it never happens. All of a sudden, you get this massive candle reversal when it should have been down here. And when did this happen? This happened on the week of September 30th. So why can't we, on a, hopefully praying for it, an interim China deal, over the next 72 hours turn around and go up and take over the broken right shoulder. So the bottom line is that the old systems don't work because of the fluidity, the speed, the movement of the machines that are constantly changing everything. So that's it. If I followed the old-fashioned way, I would take a good deal of my trading capital and short the market all the way down for those 700 to 800 points. I can't because I've been burnt doing that, but I don't always take a whole bunch down and just go one way or the other. As a tactical trader, I take bits and pieces of what's going on. But this weekly chart is not good. We have a double full stochastics pullback. We are here. Now, it's happened before, but we haven't turned till we have fully reset or come close to it. As you can see, if you just follow the patterns, forget about the numbers and stuff, we need to somehow go like this. Will it happen from 700 to 800 points down? That'll happen if we don't have an interim deal. If we keep on hammering the Chinese, if the Chinese, I shouldn't say Chinese, but Chinese government and the Chinese government starts to be stubborn and fight back, we are going to get a 600 to 800, possibly 1,000 point down. Done. It'll happen. So the next 72 hours is very critical. If you don't want to trade, don't trade the next 72 hours. Nothing wrong with that. You might miss out on vicious turns up, but then you might save a lot of money by not trying to buy every little dip. So that's good, wise suggestions, okay? Now, not everything falls. There'll always be green stocks in a bad market. I'm a survivor of 9/11. What happened after 9/11? The markets were closed for a week. We came back to work. And the markets went berserk higher. Then the pullback. And I always ask people, and I'm going to ask again, well, when did the markets really bottom? Did it bottom on 2001 or did the markets bottom in 2002?
I really don't remember.
I'll tell you the answer, but it's a good answer. It bottomed in 2002, and it bottomed not because of 9/11. The vicious attack that many of us barely survived. It bottomed 2002 because of the vicious attack by our own people called the Enron scumbags. The market bottomed in October of 2002 because of the Enron scandal, which literally took down the US markets. Don't forget to watch the documentary, The Smartest Guys in Town, or something like that. Enron took us down to the lowest point in the market, 2002, and after that, we just went berserk. Higher. So, saying all that, let's see. But simple stuff. I don't want to go over this over and over again. This is not good. Not good. Now, if we reclaim back the 34-day moving, 34-week moving average, a different story. Can this be called a consolidation channel? I would say no, because it looks like the consolidation channel is breaking down. We need to reclaim back on the SPY 290.43. Now the 290.81. Now the only reason, and the SPY closed at 288.53. The only reason I don't go hog wild and say short, 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 I could do that, is because a single tweet out of President Trump, a single nice comment out of the Chinese Commerce Ministry, or the so-called global times, Chinese global times, they're like their mouthpiece. The editor seems to be moving our markets and their markets by hundreds of points. A single half positive tweet can move the markets up 3, 4, 5, 600 points. Has it not happened repeatedly over the last couple of weeks, last couple of months? Absolutely. That's the only reason why I don't go hardcore short. Now, some of you, whatever you want, I'm just explaining this to you. You do what you need to do. Let's move on to the daily. Hi, K-Bot. Nice to see you. Now, the thing is that I'm showing you the bigger markets, individual stocks. You can trade it. Like I said before at the start of this webinar, you can trade a lot of stuff for a good 30, 40, 100%. Was Tesla down today? One of my alerts since last week? No. Tesla was up. Those calls on the reversal during the day. Forget about last week when I told you guys to buy it. It was around 152 bucks. They went to $3.30. So let's say a day trader, and there are a bunch of, I'm sure many of our members are day traders. They went from 80 cents to 330. So 330 divided by the lowest point, not that anyone catches the lowest point, is 292% on your money. Trade them. I show the charts. You can look at your charts on your screen. Roku was a very sweet scalp. Boeing went up 143% since I asked people to buy it this morning. So what gives? Don't expect ever, not even like in these volatile times, but don't expect ever the markets just to give you free money. Yeah, of course that happens. You got to fight for it. Now, if you're ready for it, then you're fine. If you're not ready for it, well, good luck. Market is not about welfare. It's about fighting to take what you think you deserve. That's why we're tactical traders. So saying all that, let's look at the daily. Does the daily look good? No, because it broke. It broke the 150-day moving average, which I've explained repeatedly, and please listen to my older videos, and I know many of you have. The magenta line or the purple line known as the 150-day moving average. No bueno. I'm going to show you the external picture, which is the charts. This is a double top with a left shoulder, a right shoulder that we hit exactly, and then it gave in. Where is the big neckline? The big neckline's at 280. That's 10 points below where we are. That means the markets can fall 800 to 1,000 points. That's only if you're looking at the external price picture known as the candlesticks. We can fall 800 to 1,000 points. That can happen, and I'll certainly be on the short side of the trade on that one. 1,000 points on no NCD. What is NCD, Dominic?
No NCD.
Yeah, it's a little like a thing. I'm going to give you N is no.
No China deal.
Thank you. There we go. We're having a TV show here. No China deal. Yes, no China deal will bring us down to 280 on the SPICE. So get ready for it. You're going to put a whatever, but don't go like bunch of money because these markets are nuts. Put a decent amount of money or a small amount of money, and it's going to get big. Just the way the SPY puts from yesterday went from 1 to 4. And I had a small amount, but it was sweet. I didn't sell it at 4. I sold it staggered along the way. It's all in my Twitter feed. And I wished I had done a lot more on that. But how the heck am I supposed to know? The markets rallied like crazy in the middle of the day on the Fed Chairman Powell giving us the gift that everyone wanted. So, just so you understand. Now, here the lower end of the channel is 284. That's going to be a major, major support. That's the lower end of this beautiful daily channel that I structured going all the way back to January 14th. It's a very technical market. Now, so far, despite all this stuff, the 34 and the 50-day moving average is actually starting to trend down a little bit, but so far, it's still kind of moving sideways, if you guys can see. Still moving sideways, which is a very good sign. Now here, that's the negative, like, where we can fall this and that. Now here is the internal. Let's look under the cover. Let's not just take your blood pressure, do your blood test, and see whether or not you have I shouldn't say all that stuff. But let's say you have some really bad disease. I don't mean a mental one, but a physical one. And like, what's going on? So doc, what's the story with my, hemoglobin count, my iron count, my prostate test, my blah blah blah. Well, the doctor comes back and say, hey, on the surface you look like crap. This is what your face looks like when you go to the doctor, but underneath the surface you're looking pretty good, you're healthy. So you ask the doctor, am I going to be like completely done in 48 hours? He goes, no, you're going to be fine. Go out there, have a good time. And that is what the full stochastics is telling us at this point. Because the full stochastics, every single time, yes, it vacillates around, but it is still, the crossover is still intact because this is the daily chart. So one day doesn't break the internal picture. This is good. So basically the doctor's telling you, don't worry, man, you're gonna live longer. And that is what the internals are telling you. Let's take I might do a session tomorrow. I'm going to show you a lot other internal indicators that I follow, which if I started showing you all of that now, like it would be a 4-hour session. And as far as I know, none of you guys are buying me drinks tonight. So we'll cover that. McClennan Oscillator getting to some serious oversold conditions. Minus 155 is futures, by the way, up 8.5 right now as I speak. K-Bot, can you hear us? Okay. So every time it gets to these levels, all technicals, what happens? Market goes higher. This was like a full month where the markets like moved between the 800 range between August and September. But every time it got down to the level, but even though it was going back and forth, 800 points, the internals were pointing higher on the McClennan Oscillator, which we have a big reveal event tonight. We're going to reveal the New York Stock Exchange McClennan Oscillator and see how ugly it is. And ladies and gentlemen, we want a drum roll. And the uglier the New York Stock Exchange McClennan Oscillator is, which I'm going to give you a sneak peek of what it was yesterday. The uglier it is, the better it is, because that means we're going to have a bigger, vicious bounce. This is what it was. Hate all these ads, but hey, that's how they pay for the service. This was 7th of October. What day was 7th of October, Dominic?
The 7th was yesterday.
Thank you very much. Sometimes you have to ask the obvious, Exactly. So no, it is good. 7th was yesterday. So this was yesterday's number. We were minus 29. Internals were looking great. This was starting to turn. And we'll need a little drum roll because in a couple of minutes, we're going to reveal what this number looks like. And just so you know, I don't know either. You might take a guess. Are we down at minus 50? Are we down at minus 64? The uglier that number is, the more money you want to put into the market. Because on the day of 2nd October, When we were down minus 65, you could blindly have put money into the market, be up 400% overall on your SPY calls. So we want a very ugly number. And if you're that scared and you haven't been trading, good for you. This is your chance. But we'll see what the technicals are telling us. So yeah, so this is fine. This is actually not too bad. And let's look at the hourly. And we're looking at the SPY. So we're looking at the actual market. SPYs show us that we're going to have a bump up unless we get some stupid, stubborn comment out of the Chinese Commerce Ministry, because the Chinese Premier Xi Jinping is actually a very good friend, to some, if any of you know that, of President Trump. President Trump doesn't like pissing on him. Okay? He's a tough guy. And Trump likes him, which is great. I'm happy. And he likes Trump too. But if some other big mouth idiot from the Chinese Commerce Ministry and this and that, unless they come up with some really dramatic statement, and what is the biggest risk to the markets? One of them is, of course, President Trump going hog wild on tweets late at night or early in the morning. But the other bigger risk is that the Chinese cancel the trip. I mean, the trade negotiations on Thursday. No good. I don't think it's going to happen. I think it's a low probability event. So on the 1 hour chart, barring all those things happening, we have a nice double bottom W formation. That means the markets short term going into the first early session, if that type of stuff doesn't happen, futures are up about 9 right now. Anything that you bought at the latter part of today, you will be able to sell at a decent profit when the markets open. That's trading. I've done that so many times. What do I say? Sell gap up opens on things that you bought between 2 and 4 p.m. You bought a couple of calls at 60 cents, you'll be able to sell them at $1. That's like buying a $6 call, selling it at $1, or buying a $60 call, which is what Booking.com and Priceline, that's how much they cost, right? Selling it at $100. Why not? So the 1 hour charts are deep oversold, and on all fronts, they are implying at this point, with futures up about 9 points, and look, anything can change for reasons I just explained overnight. That's why it's like automatically my brain like opens up at like 4:35. I'm like looking at the futures like today, like what? So I've given up questioning what the forces beyond us can do. I can only control what I can do during the day. So this is good. That was back on Wednesday last week, and this is good. So the 1 hour charts, and I will ask any of you, being that this is a W formation, what's the max? I say max upside. Remember, I used that term, max upside. So what would be the max upside of maximum upside of a significantly powerful move for tomorrow? You can see it. All you have to look at the supply points where the sellers come in or the machines come in. We know what the buy points are right here. Where is the and the
296.
You're right. 296 is one level, and this is what I call max upside, 298. If the SPYs, which are 288, go up to 298, how much, roughly, how much higher is that on the Dow? Roughly, you think? 10 points on the on the SPYs. What was that, sir?
Are you?
I mean, if we get a 10-point move based on this structural formation on the SPY, we closed at 290. Looking at the screen, we closed at 288.53. Wow. And now we are at 290. The SPYs right now are at 290. If we get 10 points on the SPY, how much roughly do you all think it is on the Dow Jones Industrial Average?
800.
Yes, you're correct, sir. It is around 800 to 1,000 points. Thank you for educating everyone out there, Mike. I appreciate that. Yes. So a 10-point move on the SPY is roughly 800 to 1,000 points on the Dow Jones Industrial Average. Ladies and gentlemen, that will happen if we get an interim China deal and the Chinese don't cancel their trip and President Trump does not go hog wild on more further restrictions on Chinese investments or visa restrictions and stuff like that. So barring that type of stuff, an interim deal by Friday, well, they won't say it on Friday, it'll probably come out over the weekend. No hardcore retaliation by the Chinese, no hardcore restrictions, more hardcore restrictions on Chinese tech companies and political officials, then we are going to get an 800 to a 1,000 point move on the Dow by Monday. And the downside, we've already talked about it. So yes, so as a trader, you can always trade the 1 hour charts. As a trader, you start, I don't look at 30 minutes, I look at the 15 minutes. The 15-minute charts are equally good. Right there, 295. You can see a large pattern developing since last Tuesday. That's 1 week, right there. Let's see, you don't want to deal with individual stocks, all the news that comes out, whatever, all that stuff. So just clean, just play the SPYs. The calls are reasonable, the puts are reasonable, and you can always play small amounts. That's the first neckline, as Dominic had pointed out, and the next neckline obviously is the big one. That's the bullish scenario. The bearish scenario is that we go down and retest 285. That's why I have a little bit of the 285 calls, just in case we get nasty stuff coming out overnight from both ends. Right there. That's a double-barrel bullish engulfing move that happened on Thursday, last Thursday. That propagated a movement on the Dow of almost 1,200 points, which was beautiful. I know many of you did very well with that. I know I did. And as a trade management perspective, you don't take all that and just say, oh, that's it, I'm going to put everything in, the market's going on. No, you take a portion of that and you play with it. Always have cash on the side. Then we are here. If things go wrong, we're going to retest 285, and those calls that we bought at real cheap prices today, we paid what, like 30 cents? I know I got some cheap ones. I can't remember. They were like 17 cents. They went to 34 cents. They were up 100%. It's all in the Twitter feed. The 285s. Yeah, the 285s. I'm looking at them on the screen. For tomorrow.
You mean the puts?
I mean the puts. Absolutely.
You said calls.
I apologize. The puts. Those won 17 cents. They went to 31 cents, and they closed at 28 cents. They'll probably evaporate into nothing if we get a move up tomorrow. Doesn't matter. That's a hedge. That's your insurance policy. Just the way there was an insurance policy yesterday at $1 that went to 3 and ended the day at 4.5. In this type of market, I believe you always have to have an insurance policy, because we don't know what's going to happen. The political, emotional capital, I cannot forecast. So that's it. We either go to 285 or we move up to this range. We don't move up to this range like tomorrow. Yeah, we can if we get like, there is one scenario I'll explain very clearly, and that's all I'm going to explain about the charts, okay? Thank you, KBot, 296. Yes, I just explained that. Thank you for your input. So one of the other scenarios that that was talked about, and I kind of thought about that myself. Bear with me 1 second. How does the Trump administration keep up the pressure, which is totally fine, on the Chinese without completely breaking their back? Remember, you negotiate with your economic competitors, the economic enemies. Let's call them competitors. I don't want to get into the enemy BS. Okay? So, bottom line is, do you push them that hard that they completely break? Is that going to help anybody? Yeah, if China was a small country, we'd demolish them in 2 seconds. But no, they're 1/4 of the world's population and very smart people, very smart technologies. And we are connected in many, many, many ways. President Trump is connected in many ways, personally speaking, with Chinese billionaires who are heavily invested in his real estate holdings. So it's not like he doesn't like them. He's playing game. So the fact is that one of the theories that was floated out was that regarding restrictions on Chinese companies listing here was simply reinforce the law which has already been in place that Chinese companies looking to list here or current Chinese company have to comply, which by the way, I agree 110%. I explained that very clearly in one of my previous webinars about the scam Chinese companies who are listed on the on the US stock exchanges, just because a lot of small to mid-level investment banks in the US American investment bank made millions and millions and millions of dollars by floating those companies, which are complete garbage. Okay, so the bottom line is those that they have to comply with the regulations or they get kicked out. So you give them a time frame, 1 year, 2 years, 3 years, either comply or get kicked out. That would be a face-saving measure for the US instead of saying full-scale blanket restriction on US companies. Guys, what I'm talking about is what they talk about, like I've said before, on the 63rd floor of Goldman Sachs. I might not be right every 5-10 minutes, but I'm dead right most of the times. And you're talking to a half smart, intelligent guy, okay? So everything that I'm talking about right now, you better listen, because these are the things that either keeps you poor or it's going to make you money down the road or very soon. So that is one face-saving measure, political measure, where you basically say, hey, I give you guys 1 to 2 years time, 12 to 24 months, 36 months, either comply with US regulations on GAAP accounting, on US accounting standards, transparency, and all that stuff. In other words, we get to really see what your balance sheet looks like, or else get kicked out. Instead of saying, Alibaba, you all suck, multi-trillion, billion-dollar company, the growing at breakneck speed, and telling our US pension funds, no, you can't put money in any Chinese companies. That is the stupidest, dumbest thing ever I heard, and it's not just me. So whether you guys agree or not, I don't give a hoot. Okay? Telling like multinational global behemoths saying, okay, US pension funds, US hedge funds, US mutual funds cannot buy those companies. Oh, that's really smart. No, I don't think the government's going to do that. If they ever float that idea, I don't even know. It's just pathetic. I don't think they will. But lots of other Chinese companies which are not really transparent, they need to comply with US rules or get kicked out. Alibaba and stuff, they're all complying with US rules. Loud and clear. All right, let's do the reveal. So, anyone got a drum roll? I guess not. Let's see here. Let's bring this in. Oh, I get a drum roll. I like that. Oh my God. Do we have dancing dogs, cats, girls, guys? Depending whatever your persuasion is, I don't know. No? Okay. Do we get a marching band? Well, Mike, I know it's late in the evening, so Mike is not going to give me a marching band. Look at that Bollinger going through here. So let's do this. Let's do this. And this is going to be very revealing, and I'm excited. So we were here. Remember, every time you get down to these levels, that's almost I hate saying this, but it's almost 100% probability. Not a guarantee, but a probability that you are going to make crap loads of money when the McClennan oscillator gets to anywhere between 50 and 70. How about that? And 80. You literally buy with hands down. Forget about indicators. Forget about what I'm talking about. Forget, it's like the whole world's blowing apart. You're going to get a short-term rally. That's going to get sold. So we have the drum roll. Let's do this. Update. But before I do that, I want some people to throw out numbers. K-Bot, throw out a number, how much you think the McClennan oscillator this was yesterday at minus 27, where it's going to land up today. Is it going to be 41, 50, 60? I need a response, please. K-Bot, I know you can hear me. Minus 45. I like that. Minus 45. Dominic. So K-Bot said here.
62.
Wow. Mike H.
69.
Ooh, good number.
Wow, I like that. Okay. I personally actually I kind of have a clue. You know how I have a clue? And I'll tell you another technical stuff that I'll tell you. If you look at the advanced decline line, we had almost at one point a 4-to-1 advancers to decliners. That shows some heavy duty, butt ugly selling. We had the trend indicator, which is the arms index, at 1.89. At one point, I think it went to almost 2. So given the ferociousness of the selling, we were up on Apple, and then it ended down $3.30, $3.30, using as a leading indicator. I will go with somewhere between Mike and Dominic, given what I see on the external side. And if we are all wrong, who knows? Update. Minus 52. Okay. So what'd you say, Dominic?
62, I think.
Okay, and 69, Mike said. And so the closest one, the minus 52, was K-Bot, correct? Yes. All right, you get the price. So that's actually pretty decent given the ferociousness of the selling. Now, all right, so that was good. And we're going to do this every session that we do. We're going to look at this because it's almost like an unknown. Now, this, from a trajectory standpoint, looks like it wants to go lower. So Mike's minus 69 might happen if more garbage commentary comes out from both sides and the mood of the Thursday trade talks beginning, the major trade talks beginning, sours more, we will get to minus 69. That means another 400 points on the Dow, just so you know. Now, when you look at this, every single time you get towards these levels, we get a vicious bounce. So please keep that in mind. Now, what is the positive in this picture? It's pretty obvious. There are two things happening here. One is this: the stochastics haven't budged; they're still going higher. Correlate that with the S&P full stochastics that I showed, still moving higher despite intraday volatility. Remember, technically, everything is all correlated. What is the basic root asset of all technical analysis when it comes to stocks? I gave the answer: the underlying value of the stock. Okay? And then everything is derived of that. Everything is a second derivative, third derivative, whatever the case may be. So the bottom line is that this is a double bottom and still great. This looks like it wants to go down a little bit more. Not too much, guys. Remember, the world doesn't end. If the world ends, then we're all gone. We meet the Almighty, okay? We'll be sitting there. We'll have Clueless A trading up in heaven. How about that? But aside from that, there is another thing here in this picture that I want somebody to answer. What is going on? There's a positive divergence going on. I'll answer the question. The histograms are actually shrinking while the stochastics are falling down. The same thing happened here. Histograms were shrinking while the stochastics were falling. This was as recently as August, when we had one of the most vicious rallies in the market that took us all the way up into a couple of weeks later into the September peak. So that's it, guys. Individual stocks, I have a lot of charts out there. I cannot predict whether something's going to move 8, 9, 10 points. That can happen in 3 seconds. Let's wake up tomorrow morning. Thank God that we're alive. Let's get to work. Don't go nuts, but be prepared for all the scenarios that I explained. On that note, I do have to go. It is 10:16 p.m. Mike, Dominic, K-Bot, thank you for your input. And everybody out there who's going to be listening to this is probably one of the most important and valuable strategic webinars you have heard with the help of some great members. God bless you all.